Hey everybody, potential shift here. It is 9:29 a.m. on Wednesday, July 1st. All right, what's going on in markets today? Yesterday was basically a disaster. Had a meltdown. Yeah, lost. Honestly, on camera, I lost 300. I did make $100 back at the end of the day off camera, so I lost around $200 yesterday. Still a disaster, and honestly, saving $100 in the last minute of trading isn't really much of an accomplishment. It's more of like a stroke of luck, honestly. But yeah, honestly, what happened yesterday was I just had one bad trade mid-morning. It wasn't. It was a good trade, actually. It was a good trade. It just didn't work, and that's what happens sometimes. Sometimes you have a good trade, and it just doesn't work, and that's what happened yesterday. And I went off the rails. Basically, I just tilted. I was down about $70, and then somehow it turned into 300. I can't have days like that. You just can't. You have to have emotional controls, some sort of hard rules in place to make sure things like that don't happen. So that's what we're going to be working on today. Emotional controls. You know what? This is a game of chance. There's going to be winners. There's going to be losers. Even if you're, the best trader in the world. Let's just say you are the best trader in the world, right? You probably only are going to win 50% of your plays. Well, 60% if you're the best trader in the world. But most of us are only going to win 50% of our plays. You have to accept that. So I had a very good trade set up yesterday. I traded it correctly. I did everything right on it. It still lost. That's going to happen. No reason to tilt and blow up $300. So anyway, that's what happened yesterday. What's going on today? Let's see here. 5 things to know. This is what I like to look at in the morning, just real quick. CNBC, 5 things to know. You don't need to know a million things that are going on in the market, honestly. Not if you're day trading. You just need to know the big stories. Is there a major catalyst out there that's going to move the market? Heat wave, that certainly isn't going to move the market. Red Cliff, all right, Nike reported stronger than expected earnings. Live from Portugal, interview with central bank, European central bank. I don't think that's going to matter. Amazon announces a new business venture. Eggs, major egg producers. No. Okay. So no major catalysts this morning. Bitcoin still at 58,700. Not falling into that trap again. We've been staring at that for 2 days now, waiting for it to break below 60,000, and it's just not going. Bitcoin wants to continue to sit there at the 58,000 mark. So, whatever. Time to let that one go. All right. No major catalysts. Bitcoin's not doing anything. We are opening down 3 points in SPY right now. Let's see here. First 5 minutes are generally chaos. We don't want to trade them. They are too hectic and they don't mean anything. Too much noise. 743 SPY right now. Obviously, if you were going to do something here, I'm thinking about, looks like there's momentum lower. I could short this. What becomes your target? 742, 740. Without a catalyst, without a clear reason why we're headed lower, I wouldn't trust any target here. 742 would be the first target. So that would probably be the one I have to take, which would mean I'm, at this point, trying to get less than 1 point. Is there a proper risk reward here to short this? No. Not without some sort of conviction that we're headed below 742, and I don't have that. I don't have that here. So yeah, I don't see anything here right now. Yesterday we were working on being selective with our trades. Still working on that. Always got to work on that. That's always important. But yeah, today we're going to work on being selective, as always. The emotional aspect of it, have to step away. If there are losers, accept the losers. It's going to happen. That is going to happen. You know what it comes down to? It really comes down to it's a confidence thing. You have to have confidence in your system and in yourself and in your profitability so that when the inevitable losing trades happen, which they will, LW, a lot of waiting, a lot of wrong, right? You're going to have a lot of wrong trades. You're going to have a lot of waiting. You have to have enough confidence in your profitability that when the losers happen, you don't spin out, right? You accept that as a natural part of your trading. This is, losers happen, that's okay. I'm not going to start upending things, and I'm not going to spin out, and I'm not going to feel like shit about it or be discouraged or have my confidence shaken. You have to have enough faith in yourself that when there are losers, you keep going. You stick with the system. That's all. Just stick with what you know. Keep doing it without getting rattled. So that's the main thing we're working on today. I have to have enough faith in myself here that when there is an eventual loser, which there always will be, there will always be one right around the corner, even if I play it perfectly, that I stick to what I know. That's all. I don't start going into what I call entry soup, where you start exiting and entering positions left and right, just kind of hunting and pecking for something. In fact, I want to write all that down real quick. I've got a whiteboard here next to me, which I keep the ideas I'm working on written down on. Let's make sure we know this. Another thing I really want to focus on today is my math. Something I really don't focus on enough, quite honestly. And the math is just really the risk reward on the trades I'm making. Where my invalidation level is, where my winning level is, so where my losing out and where my winning outs are, making sure that those ratios are correct, given the probability of the trade being successful. This is not complicated math, Risk-reward ratios are just not complicated math. So it's easy enough to do. I should be able to say on a trade, look, I'm not one of those guys who's like absolutely looking for 2-to-1 risk-reward ratio on every trade. I want at least 1-to-1, that's for sure. I don't take trades where my losing exit is bigger than my winning exit, but I'm not strict about the 2-to-1 thing. I do like it to. Yeah, my trades are usually approximately 2 to 1 anyway. They're close to that. Um, so yeah, I really want to make sure that I'm dialed in on that a little bit, making sure I'm getting proper risk reward ratios and that the probability of my trade winning is 50%. I don't want to be taking trades where my probability of winning is, you know, 35% or something, because that just takes too much of a toll on you psychologically if you're losing, 2 trades to every 1 trade you win. Yeah, that wears a person down mentally. Um, so we've been seeing the last few days. What we've been seeing is accumulation this week so far, Monday and Tuesday. We've had sort of choppy mornings, up and down mornings, and then settling in by mid-morning into a accumulation routine, which is just the market creeping higher slowly throughout the day. So that happened on both Monday and Tuesday. Choppy morning. By mid-morning, we started going into accumulation, which is just the market moving higher, but taking the stairs higher. Lots of pullbacks, lots of up and down movement, roller coaster shape move higher. Very difficult to trade, honestly, that type of market. You have to have a lot of faith in your read on it, right? Now, I thought that's what we were doing yesterday. I did say it a number of times. I was like, we're in an accumulations day. I even said 748 is where we're headed. I even said that a number of times. I mean, I had a read on it, but I didn't want to accept it. I didn't want to accept it because, number one, Bitcoin looked like it might break down, and that was a much more interesting trade to me, but it never happened. And number two, trading accumulation days is slow and painful. You have to have high conviction. You have to buy, and then you have to just hold. And you have to hold through pullbacks, and you have to hold through garbage. It's not a fun trade, that's for sure. And in the end, you're looking to make, a couple of points, honestly. Looking to make a couple of points, and they're painful points. It's hard to even say for sure whether it's worth trading that type of environment. Like I said, you need high conviction. If you feel really certain you're in an accumulation day, and I thought we were, but I guess I didn't really feel certain enough, then go for it, Just buy and then hold through the day. Because if we're going to accumulate, if we're going to move higher slowly, that's the only strategy that's going to work. You can't be momentum trading. That's not going to happen. You're not going to see big moves that you can catch in either direction. You're just going to see the up and down waves, that gradually grind higher. And you're going to have to sit through pullbacks. Yeah, it's a nasty trade. I really don't like trading BOF days, as I call them. Yeah, BOF days are a pain in the butt. Let's see. 744 SPY, 743.5. Bitcoin at 59,000. Sometimes I get this feeling at the beginning of the day, just right off the bat, sort of getting it here, that it's going to be a slow trading day. That we're not going to see a ton of action this day. Definitely getting that feeling right now. This is not going to be a high octane day. Which, again, is not a bad thing. That's not, most days aren't going to be super catalyst, go, go, go days. So, it's just the way it is. What would constitute a trade here? Let's see. What are our levels? Our opening level. Yesterday's closing level was 748 was the top yesterday. That's certainly a level. We closed somewhere between 747 and 746. 746 was a level yesterday. We opened at 745. I mean, we're looking at the usual suspects here. No level jumps out at me. Looking at the integers, basically. 744, 745, 746, 748. These are going to be the levels that matter. We just need a setup that gives us an opportunity. So in the morning, we look for the morning V, the opening range. That is the up and down movement that we see within the first 20 to 40 minutes of the day. So we're approaching 9:50 a.m. So we're starting to establish our opening range here, our morning V. We've got a down move to begin the day. Now we're tracking upward. So our top is, let's say, 745.5, which is right here, which is sort of like our pre-market resistance level, 745.5. And we've got a bottom here at 742.5. Okay. Little different there. We're going with the 0.5s. So 745, 742.5. 744 is right in the middle of the two, which is where we're at. So let's see if we just kind of freeze here at 744, or if we actually want to break above or below one of those opening range levels. adjusting one of my indicators here. Yeah, moving average. I don't want that in this indicator. All right. Right now, all I'm looking for is a break from this opening range of some sort. Got 745.5 at the top here, 742.5 at the bottom. Yeah, I'm waiting for us to break above this or to break below this bottom. That would be my first hint that something is occurring. My first setup, really. If we were to break above 745.5 here, 748 would be the obvious out. Although I have to say 747 would be a more honest target for me. Yeah. That's just how I feel. I don't know. Yeah. 747. If we break above this 745.5 level, I will get in on it. I'll get long one contract, but my out is going to be 747, not 748. It's hard for me to explain exactly why, but that's definitely how I feel. I just feel like we're opening up slowly today. Reaching for 748 feels like a stretch. Just feels like a stretch. 747 feels like a much more honest, doable out. Which would also mean I'll only be reaching, it'll only be like a 1 point play, 1.5 technically, but it's going to be a little less than that with slippage. So it's really going to be just trying to pick up 1 point, which means my losing exit is going to have to be fairly close, basically 50 cents. If I'm trying to pick up a point, I don't want my losing exit to be a point away. Like I said, we're going to try and focus on the math and the risk reward here a little bit more. But my losing exit will be where I think the trade is invalidated. Where do I think the trade would be invalidated if we broke above 745.5 here? We break above it. The trade would be invalidated probably right about here where we are right now. 744.8. Yeah, 744.8, 744.7. All right, yeah. That works. Risk reward rise. That'll be basically a perfect sort of 2-to-1 setup. We have to break above 745.5 though. So we break above 745.5, winning out 747, losing exit 744.7, let's say. So I'm on the East Coast. It's supposed to be super hot today. Yeah, top story. CNBC, 5 things to know. Heat wave, which has a gigantic effect on stock markets. Not really. Yeah. Gonna be a hot one. Today is July 1st. First day of the new quarter. Third quarter incoming. Very important third quarter, by the way, because markets have been a little shaky. Crypto is obviously teetering at a very important floor. You have the war in Iran still sort of in limbo. So crashes and down moves, if they happen, have historically happened during October, which is when third quarter reporting occurs. So performance this quarter could be very important. Now, this earnings season upcoming, not as important as I think the one in October will be, but earnings seasons are always important to some degree. This one is no exception. And reporting will start, I believe, in a week. I don't know if it's probably not this Monday, probably the Monday after. The banks always report first. Now, the banks are going to be winners here. I think that this quarter, there's going to be winners and losers because of the war and oil prices. So, winners, obviously, banks, oil company, defense contractors, all right? Anybody having to do with defense, that's an obvious one. Oil, that's an obvious one. Banks also probably did quite well. Number one, their trading desks probably killed it with all the volatility. Number two, they tend to fund these sorts of things. War is not a bad thing for banks. It just isn't. So, yeah. So banks report first. They'll do well this quarter. Then we'll get into tech. Big tech usually reports after that. I don't know how they'll do. I mean, that'll be the real test. The first week of earnings will be banks. They'll do well. The second week of earning will be the big tech companies. And that's probably, let's see here. That's probably 3 Mondays away. Anyway, you can look up all of these earnings dates yourself. Looks like Kevin Warsh might be speaking. All right, 745.5 looks like it might be breaking. So the trade I discussed earlier, if we break above 745.5, that's the first setup of the day here. 747 will be the winning out. 744.7 would be the losing out. All right, let's do a buy stop slightly above here. Okay, so I've got a buy order in. If we break any higher, Warsh is speaking. Yeah, Kevin Warsh is speaking at the ECB forum, European Central Bank forum. Boy, all right. Strange having a new Fed speaker. Powell has been around. How long was he around for? At least 12 years. I guess it was 12 years. So I'm watching Kevin Warsh right now. He's being interviewed. Oh, Warsh is talking about his task forces. Yeah. All right. Well, interesting panel at the ECB. Christine Lagarde, and who is the president of the European Central Bank, and Kevin Warsh are speaking. I thought it was just Lagarde. Then you've got two other guys there. Not sure who they are, but I'm assuming they're important economic people, economists of some sort. Good question. She just said, is anybody here still talking about rate cuts? Looks like the panel is over. All right, that was quick. All right. Apparently, Kevin Warsh didn't say much. Basically, dodged questions on rates. Not a surprise there. All right. Warsh and Lagarde not giving much hint about rates. I mean, we sort of know. Well, we sort of know that inflation has become the new major concern, and that the idea of rate cuts is sort of off the table now. Let's see the Fed Watch tool here, what our odds are at the moment. Looks like we've got a 70% chance of rates staying flat at the next meeting, 30% chance of a rate hike. Which is about where it's been ever since the last Fed meeting. So, and that Fed meeting is July 29th. All right, so we hit my entry here. Let me turn my macro on, get my prices. All right, so our exit is 747. 552.75. 552.75. Our exit is down here. Okay. 744.8. 0.7.8. It's going to be right at the bottom of this candle. How is my risk reward so skewed on this? All right. $744.7, 744.8, right here. Right about, is that about right? Let's see, 744.8. 744. Where do I think the invalidation point is here? What would invalidate this trade? You know what? This level actually looks pretty good right here. Yeah, I like this level. All right, this is a good level for me. All right, risking 45 to win 58, 59. Again, not 2 to 1. I am not a slave to the 2 to 1 risk reward ratio. I'm really not. If I was, I'd probably never place a trade, quite honestly. I always do try and keep it better than 1 to 1. Almost always. I mean, very, very rare for me to have a trade that is worse than 1 to 1 odds. I sort of float around like the 1.5 to 1 ratio. That's where most of my trades lie. Yeah, I could say that pretty safely. I usually have about a 1.5 to 1 risk-reward ratio. I wonder if that's my problem. Maybe that's why I lose. Maybe that's why I'm like Stockton Rush, building the submarine, diving down in it, that is going to implode. Anyway, yeah. I like a 1.5 to 1 risk reward ratio personally. Like I said, I don't do worse than 1 to 1, but if I was a slave to the 2 to 1 risk reward ratio, I'd never place a trade. I mean, it's just very rare to have a trade setup that, at least for my style of trading, that gives you 2 to 1 or better. I mean, yeah, I guess I have plenty of trades that are 2 to 1 or better, but those plays are always sort of long shot plays. Honestly, more often I have like 3 to 1 or 4 to 1 or 5 to 1 trades than I have 2 to 1. Most of my trades are 1.5 to 1 risk reward ratio. And then I'll have trades that are, super close exit, but big reward. So like 4 to 1 risk reward ratio trades. I have those more often than like 2 to 1. 2 to 1 is just a weird ratio. I don't know. Puts a bad taste in my mouth for some reason. Like it's like a 1.5 to 1 trade seems like, all right, you've got natural, your invalidation is where it's supposed to be. All right, anyway, I guess risk reward ratios are very dependent on your own style of trading. All right, so this one's moving in our favor. Like I said, my out is at 747. SPY. We're getting close now. Do I want to move my invalidation higher? Yeah, I do at this point. We've gone far enough that I can move my losing exit basically up to here. If we go back down to here, there's a problem. Again, this is something I do with my trades. When they're winning, I do tend to move my losing exit upward to meet where price has headed a little bit. All right, we got very close to my out here. This is like the puss out time where I start to doubt myself and then I move my winning exit lower. I'm not going to do that today. I'm going to keep my winning exit where it is. I can move my invalidation level higher though. Yeah, I can move it to right here, make it sort of a free roll. No, I think that's a bit too aggressive. Yeah, okay. That's a good invalidation level. Right below the 745.5 level, which was the resistance level we broke. If we break back below the resistance level, that's a problem. So let's put it just a few ticks below 745.5. That's our new invalidation level. So now the risk reward on the play is risking $9 to win $59, all right? Because when you have momentum in your favor and a trade goes your way, that's just always a good thing. Pullbacks, trade not going your way, always a bad thing. Okay, we came super close to my exit there. Not happy that we came that close to it and didn't grab it. Really not happy about that. I don't like that. Okay, I am moving it lower a little bit now. Fuck that. I'm out. I'm out. I'm out. No, what the fuck? All right, that's fine. That's good. All right, 56. Yeah, that's about what it was supposed to be. Yeah. It was a 59, 58 something. So I gave up a couple dollars there, exiting earlier. I did not like that it came one tick away from my out. It reached 746.9, but that was one tick away from my out. I don't like it coming that close and then not hitting it. So did I puss out a little bit? Yeah, a little. For $2 or $3. Let's say three. No, two. $2. $2. That's not terrible. All right. So that was a good trade. Now, yesterday was very similar. I had a very similar trade yesterday. We broke the morning V. I captured about a point on a trade that was very, very similar to this, and I was up about $50 to start the day yesterday. So this is super similar to what happened yesterday so far. So maybe I'll have another meltdown today. Well, that'll be good. All right. First trade in the books. Winner. Happy about that. One other thing I've been thinking about, sizing. Now, I'm pretty good with my sizing compared to a lot of traders. I trade only one financial instrument, and I only trade it for either one contract or two contracts. That's it. So I've got a lot of consistency with my sizing, again, compared to most traders. Any options trader has nowhere near the consistency that I have in terms of sizing. You cannot have, if you're trading options, you can't have consistency the way I do, trading only one instrument. And it's a futures. It's not, I trade futures. It's not an option. It doesn't change based on volatility or theta or whatever, The instrument I'm trading moves tick for tick with the underlying. So my size, one or two contracts, is pretty consistent. And my general theory has been I do one contract for sort of, I don't know if you'd call them low conviction, for like regular conviction plays that don't have huge risk rewards. And then two contracts for plays that I feel really strongly about that have good risk rewards. So if a play has a lot of meat on the bone, and to me, meat on the bone means like 2 points or more. It's not a 1 point trade. It's at least 2, maybe 3 or 4 points. So my risk reward ratio is usually very healthy in that situation, and I feel a strong conviction about it. I'll get two contracts, right? Which makes sense to me. You do one contract for plays that have a risk reward of 1.5 to 1. You do two contracts for plays that have a risk reward of, say, 3 to 1. That's mathematical, right? That makes sense. But I'm starting to question after yesterday whether that's the right move or not, having two sizes. Whether I should just reduce it to one flat size, that's it. Which would be one contract, obviously. Because yesterday was brutal. Yesterday I had just a really, really nice trade, I thought. It was around this time yesterday. If you want to look at the stream from yesterday, it was around this time, around 10:30. Really nice setup, I thought. Really pretty setup. Everything about it to me was high conviction, I thought. And it had a good risk reward. It was like 2.5 points. So I got two contracts, and the trade lost, and that is what spun me out yesterday. So a really high conviction, nice trade. I followed all the rules. I did everything right on it. And it lost. And that really sent me into a tailspin. So now I'm questioning whether having two sizes is correct at all. Whether I should just stick to one size. Because even on high conviction plays, you can lose. By the way, if we break above 747 here, which it looks like we might, I'm not going to play that. 748 is an obvious top here. And my gut tells me we may not even reach it. If we do reach 748, I would look to make a play when we break 748. I would feel no need to make a play, at least right now, if we break 747. If it keeps forming this like really nice little level at 747 and it like makes a really beautiful sort of flat top, then I'll consider it, because now you've got a really nice clean level breaking. But right now I don't want to play a 747 break. I don't have any interest in that, because 748 I think is going to be resistance, and I don't know if we'll reach it, and I can play it when we break 748. The risk reward just wouldn't be there for a 747 break, in my opinion. So anyway, yeah, I'm questioning whether having two sizes is appropriate or not. I keep working towards consistency, consistency in execution. What does that mean? That means, number one is sizing. I mean, when you talk about consistency, sizing and risk management is number one. I mean, that's like the first thing. You have to get consistent. And I thought I had been consistent with it. Like I said, I have two sizes, one or two contracts. I thought that was consistent enough, but I'm starting to question that. Deeply question that, honestly. I'm really starting to feel like, you know what, that's not consistent enough. There has to be one size. That's it. Period, end of story. One size. Why? Because of the psychology involved. Mathematically, like I said, I have higher conviction plays that have better risk reward. I think to myself, increasing my size is mathematically correct. But then yesterday happens, and I have a really beautiful trade that didn't work, which that is going to happen often. That's going to happen a lot. And if I'm sized up in these nice trades that I like and they don't work, is it going to spin me out? Is it going to put me in a tailspin? Do I want the psychological? Plus, there's the decision making involved. You have to decide, well, is this play high conviction? Is there enough risk reward here that I want to do two contracts instead of one? I discussed yesterday again something, you have a certain amount of like stamina, mental stamina for trading, and each trade takes a little bit away from you, like you're running a marathon. A lot of things, interruptions, distractions, stress, things in your personal life, not feeling well, having things to do later in the day. All of these things, they're, you only have so much mental bandwidth, Frankly, I think the younger you are, the more mental bandwidth you have. Certainly the less responsibilities you have, usually. Usually younger people have less responsibilities. Anyway, you have to conserve your bandwidth. You have to protect it to a certain extent. Your mental and emotional stamina, Because once it's depleted, that's when you start making bad trades and you tilt, which is what happened to me yesterday. And I say all this because making the decision between one and two contracts and losing on two contract plays as opposed to one contract plays drains a tremendous amount of my stamina, okay? It takes a big emotional toll on me. I do think mathematically that there are plays with better risk reward that I do have higher conviction on where it makes sense to have a bigger size, two contracts instead of one. But as we saw yesterday, do I have the mental fortitude? Do I have the stamina? Do I have the bandwidth to be making decisions about one versus two contracts? And if I lose on those two contract plays, how is it going to affect me mentally? So I'm really leaning towards just trading one contract from now on, not even giving myself that option. It's just all about execution consistency, you know? Just can't say this enough. Can't emphasize it enough. Again, if we break 747 here, I am not interested in trading that. I'm not. 748 was a top yesterday. It's going to present resistance here. So I don't like a 747 break here. There's not a lot of meat on the bone, and you can play a 748 break if that's what you want to play. You know, if you're feeling bullish. Oh, you know, we're also right now at 747. We're at the red-green line. That is the point where SPY is even for the day. So SPY is flat right now at 747, right? It's up 20 cents. So the red-green line is always a resistance level. Glad I took 747 as my out. You know, I didn't even notice that earlier. Mental slip up. I always sort of note the red-green line. The red-green line's important. It's always a resistance level. Where SPY is at 0.00 change is always a resistance level for the day. And I didn't even know that. I just said, oh, 747 is a good resistance level. That's what my gut says. Maybe on some level I did know it. I mean, I did look at where we closed yesterday, so maybe subconsciously, but still. Anyway, I feel like that was a little bit of a mental slip, not noting that earlier. I should have been aware that 747 was the red-green line. So yeah, red-green line's important. I think I'm going to be only doing one contract from now on. I don't think... I just want consistency for a number of reasons in my execution. First of all, I'm doing the streaming now, which is good. It's good for my trading. It helps me think more clearly because I'm here expressing these thoughts. That's helpful. That's helpful to me. I hope it's helpful to somebody who watches, but even if it's not, it's helpful to me to be verbalizing it. And yeah, if I'm going to be streaming and putting my trades out there, I do feel a certain obligation to be putting my best foot forward, I guess, to be putting trades that have a certain logic behind them, you know? I don't want to be giving you guys gut feeling trades, you know? Like, I think SPY is going to go up today because Kevin Warsh just said, you know, he thinks the economy looks good. You know, I don't want to give you guys bullshit trades like that. That's not a real trade, you know? Predictions, feelings, that's garbage. Those are garbage trades. I want to give you guys risk-reward ratios, mathematical trades that make sense. And that means consistency. Consistency in execution, consistency in the math, consistency in the setups, consistency in the outs, consistency in the sizing. All of these things consistent. Because that's what matters. Consistency in execution. That's the game. That's the game. The game is not, it is not, again, I've said it a million times, but I'll say it again. The game is not predicting what's going to happen. It is not analysis. It's not figuring anything. It's not figuring out some puzzle about whether stocks are headed up or down or what the economy is doing. Do you need to do those things? Yes, you do. You need to have an opinion about where the market is going and what it's doing. You do need to have an opinion about it. But that's like 20% of what goes into being a successful trader. The other 80% is execution. Execution, execution, execution. And execution is all about rules and consistency. Like I said, sizing, setups, outs, all of these things you have to have consistency on. If you don't, then you're like winging it. All right, you're flying a plane without any experience. You know, you're the pilot who just hopped in the seat and you said, hey, you know what? Let's take this thing for a spin. I've seen it in the movies. I've got the stick. I know if I pull back on it, we go up. If I push down on it, we go down. If you're playing predictions and gut feelings, that's what you're doing. The more consistent you are with your sizing, your setups, and your outs, the more you're the guy who has taken piloting lessons, who has had a teacher, who got booked his 5,000 flying hours. You know, you're the experienced handler. That's the difference, all right? It is not prediction. It is not guessing whether something will go up or down. It is how consistent you are in your execution. And what goes hand in hand with that, consistency and execution, is emotional stability. Your own self-mastery and your own psychology, understanding when you're on tilt. For instance, me yesterday, I had one bad trade. I spun off the rails. I threw away $200 tilting. Not acceptable. Yeah, you have to be aware of your own psychological makeup, your bandwidth. Anyway, so if we approach 745.5 here, I'd be sort of tempted to get long. I really would. I mean, that was the resistance level we broke this morning. Now, if I get long at 745.5, big if, what am I looking to do with that trade if I were to do it? I mean, I would obviously be looking to bounce back to 747, but that would be an odd trade. You don't see double tops in day trading. Very, very rarely. And a double top means, this is a top right here. It's very rare that you see in day trading a chart pattern that would top out here and then go down and then come back up and top out again here and then go back down. All right. Now you will see double tops in longer pattern, swing trading, longer term investing, just daily charts. You see double tops quite a bit, but in day trading, they're very rare. I don't know why, but I can just tell you that they are. It would be very rare for us to go down here and then come back and top out again at 747 and then fail. Which is honestly giving me an idea for a whole new setup. I mean, if we were to go back here, you could almost do an entry at 747 because double tops, they're rare. You just don't see the market peak at the same point twice and then fail. I mean, if it goes back to 747 after this dip, it'll almost certainly break through it. Now, if it only goes back up to here, if it only goes up to 746.5, then it could fail, But if it goes exactly to 747 right here, it would be very, very rare for it to just fail again there. I like, you know what? I'd bet like $1,000 right now that is exactly what's going to happen here. This is too soon. This wouldn't constitute a double top. If we go back to 747 here and touch it, that would not be a double top to me. That would be too quick. All right. If we kept moving lower and then, like 20 minutes later, over here came back to 747, that would be a double top. If we go to 747 right now, I don't consider that a double top. It's just too quick. I mean, we're less than 10 minutes removed from the previous top. So do I see anything forming? Anything I would want to play? Nope, not really. We're going back to 747. Okay, I gave my little speech on double tops, so you can almost guarantee that we're going to go exactly to 747 and then drop back down. But like I said, I wouldn't consider that a double top here. It's too soon. Bitcoin is at 59.6. So it does look like it's trying to reclaim the 60,000 level. I don't have an opinion here on. Let me look at some longer term charts. Our 5-day chart, our 6-month chart. This is 6-month up here in this corner. This is 5 days over here in this corner. I mean, you can see on the 5-day chart the 748 top yesterday quite clearly. So that, again, that's going to be an obvious resistance level today. We're at the red-green line right now. 747 is the red-green line. 747 certainly is where the action is today. Yeah, like I said, just because I just gave a huge speech on it. Of course, it goes right back to 747 and then goes downward. Yeah, 747 is the red-green line. It's starting to look more interesting, I will say that if we break above 747, the more clearly defined a resistance level is, the better a setup it becomes. I mean, that should be sort of self-evident, but still, it's worth talking about. The more times the market touches a ceiling or a floor and then gets rejected by it, the more important that level becomes. Again, this is common sense. But still, it's worth mentioning because it's important, even though it is sort of self-evident. So if we were to spend all morning, let's say, going to 747 and then going down and then back to 747 and then down and then back to 747 and then down, now we've touched 747 as a ceiling 5 times, right? Now it has become a very important level, right? The more you touch a level, the more resistance it gives you, the more clearly defined it becomes on the chart, the more important it is when you break that level, right? Again, self-evident, obvious, but worth mentioning. So yeah, if we keep touching this 747 as a ceiling and not breaking it, I was not previously interested in 747 if we broke above it as a level. I mean, getting long if we broke above it. But the more we touch it, the more resistance it shows, the more interested I become if we break it. It's almost like a slingshot, right? Or a bow and arrow, building up pressure. The more you touch a level without busting through it, you're just pulling back that bowstring more and more, so that when you actually let it go, it flies further. Now, am I interested here? No, this isn't enough of a build-up yet that I'm interested, because we've still got the 748 level lurking above us. And look at this this looks like a little pump fake above it. Not a very big one. I will say I'm starting to get the same sense that I've gotten over the last 2 days, which is this might be a BOF day, buy order flow day. Are we accumulating? BOF day is a buy order flow day, what I would call an accumulation day. They're very, very common. I discussed them earlier this morning because both Monday and yesterday were BOF days. And what those are is just institutional buying days, right? There's not a lot of emotion in the market. There's not a lot of retail or human trading. There's not a lot of catalysts going on. There's not a lot of volatility. But there's buying occurring, but it's happening slowly, right? And it's happening with a lot of pullbacks. So what you see is a roller coaster shape grind higher. So up and down, up and down, up and down, but generally trending upwards throughout the day, right? So I will say this chart pattern is starting to remind me of what we've seen the last 2 days. Now, the last 2 days, we also saw, I can show you the last 2 days. Why does this chart look so ugly? This is the last 2 days. So this was Monday right here. But you see we had a big dip, and then this is Tuesday right here. We also had a dip there at around 11. So both days we had a dip, even though they turned into accumulation days, right? We drifted higher all day with pullbacks on Monday. Then Tuesday, same thing, drifting higher all day with pullbacks. But on both days, there was a mid-morning dip. So, and right now it's approaching 11 o'clock. You know, so there's definitely a BOF days, accumulation days are just so hard to trade. They really are. Like I said, they're just slow grinds higher. There's so many pullbacks. They're very difficult to make money on because you have to sit and bear it through the pullbacks to gain 2 or 3 points, and it takes all friggin' day to earn those 2 or 3 points, right? And you have to eat a bunch of we talk about the mental stamina, the emotional stamina. BOF days require a ton of stamina if you're going to play them. They're very, very difficult trades. So as a general rule, I don't like to play them, because there's only one way to play them. That is to try and get in at a good price, to buy at a bottom, sort of, whatever you think a bottom might be. I mean, this might be a bottom, 745.5. That could be a bottom. Buy, and then you have to hold throughout the day. You don't have any other choice. You have to really commit to the play. So you have to feel very certain that it is a BOF, it's an accumulation day, and you also have to feel fairly certain that there isn't going to be a big pullback that's going to knock you out, which is why you have to buy near a bottom. And then you have to hold. Then you're going to go you're going to go upwards, you're going to be up, a point or two on the trade, then it's going to pull back and you're going to be even on the trade, maybe even down a little on the trade, then it's going to go back up and then it's going to pull back. It's real hard. It's real hard to play BOF accumulation days unless you're like really friggin' committed to it. I mean, you really got to feel strongly that, today is the day where we creep higher. I certainly don't feel that way quite yet. Do I think that I think it's a very strong possibility. I would put it at 50% right now that we're starting a BOF accumulation day where we're going to drift higher throughout the day. What would I say the target is? 750, right? Let's say we close today 750 SPY. Or maybe not even close, but we hit 750 somewhere between 3 and 3:50 p.m. today, right? That would be a BOF accumulation day. We spent all day going up 3 points, right? I'd give it about 50% chance that that's going to happen. That's not good enough, I don't want to risk. Like I said, it's a difficult trade. I would have to buy right here and then just hold all day until past 3 o'clock. Now, on those BOF days, you might hit the top at 350, and then in the last 10 minutes or the last minute, you get a pullback for a point or two. You often see that on accumulation days. You see the drift higher, you move up 3, 4 points, 5 points, whatever, all day, Then in the last minute or the last 10 minutes, boom, you head back down. You give back half of what you gained. But still, like yesterday, we topped out at 748 at 3 o'clock exactly. 3:15 maybe. Then spent the next half an hour going back down to 747. In the last minute, we shot back up to 748, but then also went back down and closed at 747. So you accumulate, you top out at 3 p.m., between 3 and 3:50 p.m., and then, the last hour is its own beast. The last 10 minutes is its own beast, and then the last 1 minute, 3:59 to 4 p.m., is usually just chaos. So anything can happen there, Trying to predict what happens in those last... I mean, you can't predict what's going to happen in those last minute or two. Usually you have a retrace, a mean reversion during that last 10 minutes or 1 minute. If you're up a little bit on the day, you pull back a little. If you're down a little bit on the day, you go up a little. You mean revert during those last 10 minutes or 1 minute of the day, usually. Especially on BOF days, accumulation days, where you've drifted higher all day. There are times during that last minute where you'll continue the move strongly, but usually not on accumulation days. Usually on big emotional days where there's been a catalyst and there's a lot of volatility, you can see a big continuation of the move that's already occurred in the last 10 minutes or last 1 minute. Which is kind of counterintuitive, right? So if SPY was up, say, 12 points, I would say it's more likely in the last minute that we go up another 2 points than if we were only up 4 points in SPY for the day. If we were only up 4 points, I would say it's more likely that we mean revert. But if it's been a very emotional, volatile day, it becomes more likely that that last 10 minutes and 1 minute, whatever move you've seen during the day actually continues into the close rather than gets pushed back against. I mean, neither of those patterns is anywhere close to 100%. I would just say it's more likely than not. That's the kind of pattern you see. If you've had a slow, grinding accumulation day in the last 10 minutes, you usually see mean reversion slightly more often than continuation. If you've had a strong, emotional, volatile day where you've had big movement in the last 10 minutes or 1 minute, it's slightly more likely that you're going to see continuation of that move. For whatever that's worth. I have been doing this for 12 years. I really have. Believe it or not. I'm still not profitable, but why is that? I sort of chalk that up more to my emotional makeup and my personal life circumstances. I got a lot of shit to do, that's for sure. I've got a lot of responsibilities. I've got kids. If I was 23 years old and single, I really do think I'd be a profitable trader. I do. I've been doing it long enough. Like I said, I've been doing it for 12 years. I've got a ton of experience at it. I'm not going to sit here and tell you, verified millions, market wizards. Wait, let me get my award. Here we go. Trader of the Year from the official Trading Academy of Futures Commodity Indexes. Named me their top trader of 2024. Verified, extra verified, super verified, double verified, triple verified, quadruple verified $1 million income in 2025. Not going to show you my tax returns, but it's definitely verified. Yeah, no, I'm not going to bullshit you guys. I'm just like every other trader out there. Why these people? I mean, I guess it attracts people, does it? People want to watch guys who are claiming that they're $1 million traders, but yet there's no evidence of it whatsoever. Trading is funny like that. You know, I guess it kind of goes hand in hand with Wall Street and finance, because Wall Street and finance in general, it's kind of a rip-off business. Let's be serious. I mean, it's a bit like being a used car salesman, you know? It's just known. It's just one of those professions that's known as being shady, you know? Finance, Wall Street, it's shady shit. Now, mind you, it's sophisticated shady shit, you know? It's not like the plumber who rips you off and tells you or the car mechanic who tells you, you need extra repairs when you don't. The schemes of Wall Street are a bit more sophisticated, but it is the same vibe. It's the same scam artist bullshit. It's just people who are a little bit better at it, right? There's degrees. There's degrees of shady ass con men, There's like the bottom of the barrel shady ass con men who are maybe like, like the Cutco knife sellers. I did that for a little while when I was a child, more or less. Like shady salesmen. Maybe they're like the bottom of the barrel con men, And then you move up the tiers. Wall Street finance people are pretty high up on the tier level of con men. They're A tier con men, that's for sure. I'm not sure they're S tier con men. Politicians are really they're the S tier con men. But Wall Street's up there. They're definitely A tier con men. So yeah, finance is some shady shit. So yeah, I guess it doesn't surprise me that on YouTube and X, you just see all of these people claiming they're $1 million traders, but there's no proof. What the fuck? I mean, it's not like anything else where, like soccer, Lionel Messi or Mbappe. I don't even know how you say his name. Is it Mbappe? Their accomplishments are documented. It's very clear that they've done what they said they did. Everybody's seen it. And most professions, it's the same way. People who have accomplished something, everybody knows it. It's viewable. The accomplishment, what they have done, is tangible, and everybody sees it. Why with trading is it you just have people claiming that they're $1 million traders, and yet there's absolutely zero documented evidence of it? Like, I wouldn't say, a lot of people who claim to be $1 million traders, and I said this yesterday, they worked on Wall Street, they worked for a big bank, They had the backing of a Wall Street firm, and they made a monster trade or two, right? They caught one huge trade and made billions on it. Well, not billions, but millions, right? Like Michael Burry, for instance, right? The guy has been wrong about the stock market every single time he speaks. But in 2008, he did catch the subprime, meltdown. And he made millions on it. So there are a lot of guys like that out there, right? Jeremy Grantham, spoke about him yesterday. Perma bear. Been a bear for 15 years. I'm not playing this, by the way. This little breakout, I'm not interested in it. 748 is a level. So there's really no meat on the bone here. My out would have to be 748. So I'd be trying to catch, if I got long here, I'd be trying to catch 50 or 60 cents. Not worth it. Yeah, so Jeremy Grantham's another one. Perma bear for the last 50 years. Happened to catch the dot-com bust. Happened to catch the subprime crisis, I think, in 2008. So he made his millions, and now he's a legendary investor. So you get that a lot, too. You get guys who just nail the shit out of one or two trades because they work on Wall Street and they have the financial backing of a major bank or a team behind them. Way, way different than what we're trying to do. Completely different than retail trading. So, I'm not trying to take that away from anyone. Good for those guys. They crushed one trade, but they also had a Wall Street job. I don't know. If you're working on Wall Street and you're crushing it, well, guess what? A lot of people who work on Wall Street crush it. A lot of people who work on Wall Street make a lot of money. Most of them do it by being shady, but, it's good. It's good for America in its own way. But if you worked on Wall Street and then you come and you say, "Oh, I'm a great trader," well, no, you worked on Wall Street. You didn't really trade. I mean, not like we're trading. Whatever. I just pet peeve of mine. That's why I'm streaming what I'm doing. You know what? Trying to be like Messi here and Mbappe, however you say it, Mbappe. Let's just show it. Show it. Don't say you made $1 million trading. Do it. Right? I don't even want to make $1 million. Just 100,000. That'd be nice. If I could show that. Guess what? No one else has shown that. I don't think. I don't know. Maybe somebody has. All right. So we busted above 747. We touched 748. I have a strong feeling, just a strong feeling that this is just an accumulation day, which means a slow grind higher with pullbacks. And I have a strong feeling that if we break above 748 here, it's going to be a pump fake. We're going to touch 748.3 or 748.2, and then we're going to come back down. I really do have a strong feeling that that's what's going to occur. So I'm not going to play it. Can I tell you exactly why? No. It's just my gut, my intuition, my experience here saying if we break above 748 right now, it's going to be a pump fake. And we're going to head back down. And if you try and get long when we break above 748 here, you're going to get stopped out. You're going to get stopped out. That's my feeling. That's my feeling on it. Now, could we have played the 747 break, when we broke above 747 here? I don't know. I mean, when we broke above it here, I even said it when we broke above it, you're trying to get 50, 60 cents. No, that's not playable. I mean, what's your out going to be? So you get long right here. Your target is right here. Where's your out? Right there? I mean, you're losing exit. The risk reward is shit. I sort of have like a 1 point rule, basically. Right? A bare minimum of 50 cent rule. The trade, you have to be trying to at least earn 1 point. Or else it's just not worth it. Anything less than that doesn't make a lot of sense. And certainly a trade where you're trying to make 50 or 60 cents does not make sense. I don't know, 80, 90 cents, and now we're starting to get to the borderline, in my opinion, of what's playable. So we're at 748. It's tempting. I mean, it's tempting if we break this level to get long. What's your target? 750, obviously, is the target. So we break above 748. You get long. You're trying to ride it to 750. I'm like playing this out in my head here. What's it look like? It looks like a slow grind higher. It looks like a BOF accumulation day higher, which is a tough trade. LW. A lot of wrong, a lot of waiting. You're going to be wrong a lot. You're going to do a lot of waiting. We're waiting here. So the issue is going to be, if we break above 748 here, are we going to play it? Boy, it's a tough call. It really is. 750 would be the obvious winning out. 747 would be the obvious losing out. Now, with slippage, commissions, the truth is you don't get in exactly when you break above 748. You get in more at like 748.3. So your risk reward is not 2-1, even though, it looks like it is on paper. Break above 748, winning target of 750, losing target 747. It looks like a 2-1 trade on paper. But again, the truth is you're not really entering that trade until 748.3 or so. So really, the odds are you're trying to win 1.7 points to a 1.3 loss. Then you add in commissions, or maybe a little bit of you take your exit just a little bit early, you shave off 10 cents, you take your exit at 749.9 instead of 750, or 749.8 instead of 750. And now you're looking at a trade that's more like 1.5 to 1.3. And then maybe you want to give yourself a 10-cent cushion on the downside, so that 747 isn't the exact exit. Maybe you want to make your losing exit 746.9. Well, now you're looking at 1.5 to 1.4 as your risk reward. So that's the reality of the math when you break a level, all right? You can set your winning exit 2 points higher, your losing exit 1 point lower of your level break. But the truth is that even when you do that, trade is closer to 1-to-1 than 2-to-1. So you got to feel pretty good about it. Now, if we break 748 here, do I feel good enough that we're going to hit 750 before we hit 747? That's a tough call. That's a real tough call. I don't know. I really don't. It is not a trade I'm jumping for joy about, but it's also not a trade that I would dismiss immediately out of hand. It is really a borderline type play for me. We break 748. Do I really think we can reach 750? The problem is, I do think we will get to 750. I do. It's just, it might take all day, and there might be a lot of pullbacks. And I'm not sure I want to sit through that. I'm not sure I'm not sure we're going to hit 750 before we hit 747, I do think we'll get to 750. It's just whether I'll be able to endure the trade. Mind you, if we don't break 748, I'm sort of hoping we don't here, so I don't have to make this tough decision. If we don't break 748, it's all moot. But it does look like we're going to break 748 pretty soon. And then it's going to be decision time. Shit. Okay, we're going. Fuck. I don't like it. I don't like it. I don't like it. I don't like it. Ugh. This pains me. It's just such a borderline play. Really tempted to get in here, get long. Again, 750 is your winning exit, 747 is your losing exit, but it checks a lot of boxes for me. It does, but it doesn't feel right. I don't know. Something about it doesn't feel right. Another thing I'm working on today, just sort of listening to my gut here. You know, my entries, I guess, are going to be my experience and my intuition to a certain extent. I hate to say that because I keep talking about consistency and but what good is doing this for 12 years if you don't use your experience to some extent? So, my entries are going to use my intuition and my gut to a certain extent. My execution after the entry, though, that is where rules and consistency must apply. That's sort of, I guess, the hybrid system I'm sort of working on. Use your gut and your intuition for entries. Use system and rules for execution. If that makes sense. I don't know if it makes sense. Does it? Anyway, yeah, tempted to get long. I mean, this is decision time. It's gonna pass me by if I don't grab it now. But fuck, I don't know. Yeah, I really don't. I don't know how I feel about this one. No, I'm not gonna take it. I'm not. I think it's a very valid trade to get long right here. I do. 750 as your winning out. 747 as your losing exit. Very passable trade, acceptable, whatever you want to call it. It would be a good trade. I don't know. There's something about it that I don't like the feel of it. So I'm gonna pass. I'm gonna pass on it. I'm gonna pass on it. But like I said, I don't know. If you're watching this, if you're trading, if you need a trade, I don't think it would be a terrible trade. I personally I don't trust it quite enough. I don't even know what I'm rooting for here. I mean, do I want it to go? Definitely regretting not getting in now, but it's not there yet. My friend just texted me, bought 1 cent calls in a random stock. Wish him luck. 1 cent calls are fun. Little lottery tickets. How do I feel about this play right now? If I could go back in time and buy it right here, well, I'd be a fool not to, considering we're up 70 cents from where I would have bought it. But I'm still not sure I'd take it. Which is a good sign to me that I made the right decision. Because even up here, 70 cents later, I still don't feel great about it. So if we get there, we get there. Sure looks like we will. And I'll have to be careful not to be too hard on myself about not getting in on it. I'll tell you, I'm considering a short here, to be perfectly honest. I really am. No. Am I being emotional? Am I just considering that short because I'm feeling bad about missing? Yeah, I might just be being emotional here. Yeah, no, don't do that. I haven't considered shorting here well enough. Although I'm really, I don't know. My gut is suddenly saying, you can short this. But again, that might just be my an emotional play based off of regretting not getting long. Yeah, okay, yeah. That would just be an emotional play. Don't do that. Don't do that. I mean, what would my risk reward would be? I mean, if I got short here, I'd have a very close out. I could put my out right here. I mean, I could put my out right there. What would my winning out be? I mean, my winning out would be 747, wouldn't it? Man, 747 is asking for a lot. A little below 748 would be more accurate. No, don't. Why am I pondering this? I'm pondering it because I have this feeling that we won't break 749. That's my feeling. That's why I didn't take the 748 break higher in the first place. Fuck it. These would all be emotional trades. You know what? If I miss the play, I miss the play. That's all it comes down to. We broke above 748. I could have played it to try to get to 750. I chose not to. Chose not to. See, I can tell right now I'm already like my mind is searching for like plays I wouldn't normally take because I'm bothered that I didn't just get in on this one. I was very torn about it. And we haven't hit 750 yet, so I don't know if it would have been a winner or a loser. But we have advanced a point now. Does look like there's a good possibility it would have been a winning trade. That's going to bother me a little bit. So I'll probably step away if we hit 750. You know what? I'm just going to step away, period. Yeah. I'm agitated a little bit by the whole decision I had to make there and whether it was right or wrong. Yeah. I'm going to do what I didn't do yesterday, which is just take a break. Break time. Break time. All right, so this is sort of what I was afraid of. Never quite hit 750, right? We topped out at 749.3, and now we're drifting lower. So do I think 750 will still happen? Yeah, I think it probably will at some point today. It just might be at 3 o'clock. And you have to endure pullbacks like this, you know? These accumulation days, they're just hard to trade. They're just hard to trade, you know? You would have had to get long right here. You know, you would have had to get long at the breakout. Above 748. You would have been up a bunch. Now you're up only a little bit. You're thinking, should I get out? You know, we might break down lower. Say we go down to here. Now you're negative on the trade. But then it might go all the way back up. I mean, these are the kind of decisions you face when you have an accumulation day, all right? And they're not easy ones. So I'm sort of glad I'm out of this one, I guess, right now. Thinking if I should get a few chores done because I don't see many trading opportunities in here in this range, especially during lunch hour, 12 o'clock. You know, things tend to channel during 12 to 1 o'clock, and it's almost 12 o'clock. So I could see us channeling for the next hour between 748 and 749. And that's not going to be a trading opportunity. Channeling between 748 and 749 will not present any good trading opportunities. What would present a trading opportunity here? Shit. Honestly, it's hard to see one. A break below 748. It would have to be a pretty decisive break, but you know, no. Then you got a wall at 747. No, a break below 747. That would be a trading opportunity, all right? A break below 747 would signal to me that we are moving lower. And it might even pick up speed, right? It might even get some momentum if we break below 747, which I don't think is likely. But I'm just outlining what would present a trading opportunity today. Yeah, a break below 747. A break above 750. Break above 750 would be a trading opportunity. Because again, now you're breaking above a level where you might start showing some momentum moving higher. You know, we break above 750, you can ride it to 752, maybe even 754 if you want to try and stretch it out. But we'd have to break above 750. A break below 747, you could definitely ride that down to 744. Definitely 744. Yeah. I would look at that as the most likely good trading opportunity upcoming, if there was to be one upcoming, a break below 747 with a winning out of 744. A break above 750 with a winning out of 752. Although for some reason I feel like that's less likely. But we're entering this lunchtime hour, and I just think we're going to be stuck between 748 and 749 at least for the next hour. Maybe at 1 o'clock we'll get some sort of clue as to which direction we're going to head in. That would be my read on it. All right. I'm going to take a break because, like I said, I don't see any trading opportunities for the next hour. Might as well get some other shit done. Yeah. If I were trading, 747, 750, those strike me as the important levels. Look for breaks below or above that. And I'm going to try and get back on this afternoon. Good luck.